Good morning and thank you for joining the Tulla Resources October Investor Webinar. I'm Jane Morgan, the Investor and Media Relations Manager. Today, I am joined by Tulla Resources Executive Director, Mark Maloney, who will be running through our recently lodged company presentation, as well as expanding on today's announcement regarding the update on the Norseman Gold Project. We will also be running through a Q&A session following the presentation. So to ask a question throughout the presentation, please use the Q&A function at the bottom of the screen. Mark, I'll now pass to you to run through the presentation.
Great, thanks Jane, and welcome everyone to our webinar. Thanks for taking the time to join. As Jane said, today I will run you through our recent corporate presentation that was lodged with the ASX. So looking at our corporate snapshot, as many of you know, Tulla Resources was launched with 50% interest in the historically producing Norseman goldfield. As well as gold, we have many other prospective minerals there, we believe, in iron ore, lithium and nickel. The focus at the moment is to very much get the gold asset back into production and fast track cash flow, whilst we are continuing to spend a lot of money drilling out the property, exploration targets and resource developments to increase the reserve life of the asset as we move forward. As I said, there's other minerals there as well, and we're very focused on exploiting those opportunities as we move forward. We believe we have a very strong board and management team. We've taken many years to put this together. Kicking off with Kevin Maloney, our Executive Chairman. He has a long history in the resource industry and the resource finance industry. He's built many companies from scratch, particularly in the service space, most notably the MAC Resources, and been instrumental in the value creation of many mid-cap listed mining companies. Mike Anglin and Andy Greville, our key independent directors, they have extensive background in big company mining, BHP, Xstrata, working in various roles around the world. They have a lot of experience in bringing assets into production and further development of them. Also, a lot of experience in joint ventures, which is critical for us here, given we are in the relationship with Pantoro. And they also have exceptional deal flow, which is going to be very valuable to us as we move forward with our corporate strategy. The management team we have, likewise, has been around for a while and is very stable. Most notably, though, is our recent hire, Andy Robb, who we've put on the ground in Perth as our Norseman asset leader, instrumental again for us to manage our joint venture relationship and add value to what we're doing over there. Andy is a very senior mining engineer, extensive background there, which we think is critical, given Norseman is a multiple pit operation. And also, Andy has a lot of experience in joint ventures, sitting on both sides of the equation there, working with the manager and the non-manager side. So Andy is key for us. We've also recently set up a strategic relationship with Mining Associates, and that is proving very beneficial to us. They're a highly experienced global group of mining technical advisors. Given we are an investment holding company, it doesn't make sense for us to have our own extensive technical team, and working with Mining Associates gives us the benefit of that, calling in the various technical needs as we need them from time to time across a multitude of resources and disciplines. So we think that's been a really smart association and is working well for us. Just kicking off the detail with some of the investment highlights. As we said, we've got 50% of the Norseman project. There's an extensive mineral resource there, and we can talk a bit about that later. We believe there's plenty of exploration upside, both brownfield and greenfield. And that is being demonstrated by the exceptional drilling results and recent reserve upgrades that we've put out. There's a very well-defined growth strategy that's been put in place with our joint venture partner, Pantoro. We are on track to double the ore reserves by the end of this financial year, and that keeps us pretty excited. We've talked about the management team. We do have a very strong balance sheet, plenty of cash sitting there. We own 100 million shares in Pantoro, or 7% stake in them, which we deem as being very strategic, and we're debt-free at the moment. We are running a debt process as we speak. That's been going on over the last few months. And the view there is that we would like to get a facility of roughly $20 million in place to give us some working capital as we come into production, and just provide us with a buffer. So we are optimistic on being able to execute that debt facility, and are hopeful of doing something there in the near future. We are engaging with a number of parties, and have some draft term sheets. And as I said, we will execute something there hopefully in the near future. Looking at the joint venture structure, the rationale there was when we ran the process in May 2019, we didn't want to sell 100% of the asset because we believed there was still substantial upside left in it. We realized our skill set was in identifying assets and developing them a little, and then bringing in the right operating partner. So that's what we feel we've done with Pantoro. The reason we were attracted to Pantoro as operating partners was that they're a very successful young emerging operating team who had demonstrated themselves. And also they were small enough so that Norseman would be a significant part of what they did and meaningful to what they did. We didn't want it to get lost in a big company. So working with Pantoro has been great. We believe they've ticked every possible box they needed to tick, probably more, and the relationship works well. And we're very grateful to be working with them. The way the joint venture works is fairly equitable. Pantoro are the manager through their vehicle, Pantoro South, but there is a joint venture committee that oversees the manager. They have one representative, we have one representative, and the role of the committee is to make strategic decisions and set the budget. The overriding objective, if there are issues, is what is based as best equitable return for both joint venture parties. And just a note, we both hold cross security over each other assets should there be default on sums or issues. So pretty good joint venture set up, and we're happy with how that is operating. The Norseman Gold Project, you can see here, is quite extensive, very, very large land holding with plenty of targets. We've been, with Pantoro, very strategic in how we're going to approach it, as you would have seen in the phase 1 DFS. 6 mining centers we've identified, being the most easiest to get back into production, with 4 key ones over the first 7 years. A lot of high quality infrastructure in place, which we'll talk about. And I think just a note that the phase 1 plan has only really looked at 30% or a very small part of the mineral resource areas. As I mentioned, there's a huge amount of existing infrastructure in place at Norseman, and that was the key attraction for us to the asset many years ago when we got involved. Save the processing plant, everything is in place to get the thing into production. We did decide to build a new processing plant, GR Engineering undertaking that for us, 1 million tonnes per annum. Reasonably easily expandable to 1.5 million tonnes. that is really all we need to do from an infrastructure point of view. So with the infrastructure there, obviously leading to much lower CapEx compared to other projects. Just some highlights from the DFS, which was released in October 2020. Phase 1 had a 7-year life. It's showing some really good returns and a short payback period. Small CapEx, as I said, given every bit of infrastructure, save the processing plant, is there. And note the cost to convert at $22, very, very low, which we're happy with. This is the project development timeline. Construction is commencing as we speak. As I said, GR are building the processing plant. We have a contract with them for 47 weeks to completion. So roughly August next year, we think will be first gold. We've got mining contractors scheduled to be on site around April. And I think also just to note that we've got around 65,000 tonnes of gold-bearing ore that was recovered from the foundations of the old plant, which will be immediately available for input at startup. So we're very excited that construction has begun and that project is now aggressively moving forward. Just looking at phase 1 here, you see the top graph shows how little of the current resource is currently in the mine plan, and the diagram below is of Gladstone, which tells the story that the majority of deposits to date have been really drilled at the open pit position, and we really haven't drilled anything for the underground extensions. And you can see that there's multiple high-grade chutes there. Most of the deposits have exactly that opportunity, again, which we're excited about. As I said, the DFS was very much phase 1. Phase 2 is now coming into to focus. I think the prime focus of phase 2 are these two areas. Scotia and Mainfield. Scotia, as you know, was part of phase 1, and as we expand into phase 2, it's been returning some very, very strong drill results. The Mainfield has always been a prime target for us. It's produced more than half the gold out of Norseman previously. There's still a lot of areas there that are untouched, and we've also been getting some strong results from drilling there initially as well. We're very confident this area will substantially increase the mine life as we move forward. Scotia has been a real exploration success story for us. It's basically a large open pit in its own right, starting at about 170,000 ounces before it transitions to underground. Every prospect drilled down there has come up with some strong results, and you can see some of those results on the screen there, which we think are very notable. The thing that we've been getting most excited about is Green Lantern. We announced a discovery there in August 2020, and then we've quickly moved to a maiden resource and reserve, which was announced last month. There's very strong width and grades there, and as I said, it's probably the thing that we've been most excited about at Norseman, and it does show the potential there for continued new developments as we move forward. As I said, Scotia's already a pretty big pit at about 1.1 kilometers long, and it's getting bigger. It's likely to become one pit with Green Lantern and double the length. There's significant underground to follow, as I've already highlighted. And we've been actively drilling in the deeps, and we expect to convert a large portion of the material down there into reserve as we move forward. Just some more stuff on the main field. Again, this is a massive system. You're looking at about 6 kilometers there on the scale bar. There are several different quartz veins, and we believe modern methods will allow us to access a lot of areas that were historically difficult to do before. We've ranked the focus there. You can see the green areas based on productivity and access. So again, we're quite excited about the main field area. This is a interesting diagram. It just shows that it was one of the areas that was mined before. Shows that there's a lot of pillars left as a result of that mining. Massive blocks not yet mined. It was last mined in about the 1970s, and you can see some of the results that have been returned there. 5.7 meters at 35 grams per ton. Pretty excited about that, and an indication of more to come there as well. This slide gives you a good overview of the region and the geology. Again, the point I'd make is the extensive gold deposits there over a strike length of about 70 kilometers. Huge amount to deal with there, and many, many years of success to come out of Norseman, we believe. So you can see from all these slides that, yes, there's a 7-year mine life in phase 1, but that 7-year life is going to be doubled and beyond in the near future as we continue to invest. The key here, we think, is to be taking a very simple, systematic approach, which hasn't happened at Norseman for many years. We've started with quite a simple startup plan, which we've outlined, and we think is robust, or at any time coming from around 3 sources, which we think is key, with high-grade narrow vein mining, and particularly learning the lessons of the past from Norseman. So the difference here is very much a systematic approach. Norseman is an interesting comparison to its near neighbour, Kambalda. When Western Mining sold off its gold assets in the 1990s, Kambalda went to Gold Fields, and they invested heavily in exploration and the ground, and it's been very, very successful for them. Norseman went to some smaller time players who didn't invest, and one in particular was knocked out because of a hedging issue. But generally, Norseman hasn't had the money on it, so the money spent on it. So now, with 600,000 or 700,000 in ounces in reserves ahead of it, and that doubling or increasing to about 1.2 by the end of this financial year. That's the most that Norseman has ever had ahead of it in its entire history. And we believe with by the end of this financial year, probably close to $70 million of investment in the ground. Norseman has that potential of Kambalda, and is an asset that now is being invested in well. Just a bit about our overall strategy. As I've highlighted, the focus really is on getting the asset into production and generating that cash whilst we continue to exploit the exploration side. Beyond that and the gold, we think there's some opportunities to acquire some more land around us, which we're looking at. And we also believe that there's a real opportunity for regional consolidation and benefits to come from that. We are starting to look and do some work on the other minerals that we've always known that have been there, but we've just been prioritizing the gold. That does keep us excited. The iron ore, it's interesting. It's hosted by a sedimentary iron formation, or SIF. Some people like to call it banded iron or BIF. What we have there is mostly magnetite. There's some individual units that range in width between 15 and 240 meters over about an 18-kilometer strike. We've done some Davis tube programs on limited samples, and it suggests the magnetite is upgradable to good economic grades. The work on the iron ore is historic, and we do need to do more, but we are excited about it. With the nickel, Nickel Australia spent a lot of money drilling there years ago in a joint venture with Western Mining, as I understand it. There's a lot of information and data on the nickel, which we're working through. We believe that potentially there is high-grade nickel sulfide deposits, and we're in the right area with successful neighbours in nickel. We just need to work out the size. So that's quite interesting as well. Lithium, again, we're in the region of some well-known hosted large hard rock lithium deposits. We're right next door to Liontown's Buldania project, and we've done some small chip sampling that has got us excited as well. The way we'd like to commercialize those projects is looking at bringing in our own management teams, potential farm-ins, and joint venture partners. And there are some early stage discussions, very, very early stage discussions happening in those areas. Beyond that and down the track, we're interested in continuing to pursue battery metal opportunities. Just finishing off before we turn to questions. We believe from a valuation perspective, we are relatively cheap. We're sit at a very large discount to any of our peers on an EV to resource or EV to reserve ratio. We did list in a weak gold market, and hasn't been so good since, but improving. We believe gold sentiment is changing, and also now we've got the talk of the other minerals coming into the equation too. There has been a lack of progress with some permitting delays, but they're now out of the way. And we believe there's a number of catalysts moving forward. I see those catalysts as being the fact that we've now commenced production this week with any permitting delay out of the way. There's going to be a lot more drilling results to come and reserve upgrades, which we think are substantial. Hopefully we'll get some news out there on what's happening with the other minerals. We've got production commencing in August next year, and potentially there is corporate activity that could always enter the equation as well. We're well covered, or lucky to be well covered, by Canaccord and Bell Potter, and they have some really good research out on us, which I'd refer you to. With that in mind, I will hand it back to Jane.
Thanks for that, Mark. I might just get you to stop sharing. Wonderful. So we've had a few questions come through, so I will jump into them. So what impact will the Green Lantern and the Scotia Deeps drill results have on the gold production? And further to that, what upside is there to the DFS, given the original is already reported as a phase 1?
Well, I think, as I said, we've already seen Green Lantern add to our reserve life. And I think, as we continue to do more work in that Scotia area and others, we've guided and Pantoro have guided as the managers that the reserve will double by the end of this financial year. And we think that's very much on track. So, that's pretty substantial, doubling what's already out there from the phase one.
And Mark, I know you touched on this earlier, but what is the planned exploration program at Norseman?
Well, I think it's, continue to do work in those Scotia Deeps, the main field, and then there's some broader areas outside of that. But, I think it's really the focus at the moment is to get things ready ahead of production and coming into that phase two.
And so just onto production, actually, what is the current position with respect to funding through to the commencement of production?
Well, I think it comes back to the comments I made on the balance sheet. We're pretty well cashed up with no debt at this stage, but we are running a debt process at the moment to give us some working capital buffer, and we believe that's looking pretty good. We've engaged with a couple of parties, and we're hopeful of closing something there in the near future.
And just one to the future. So what are the key valuation creation events over the coming 12 months?
I think, look, we commenced construction this week, so that's got to filter through to the market. As I said, there'll be some really good drilling results out or continued to come out with a substantial upgrade to reserves on the horizon. We're doing some work on those other minerals, and hopefully over time we can release more detail there, which we will. And then I think coming into production next year is going to be a pretty big milestone and catalyst for us as well. And I think you see us move out of the category then of a developer into a producer, and there's always a big uptick in valuation metrics there. So that program to operation is now real, with construction beginning, and we've got a very good contractor there in GR Engineering, and we're quite confident. It's a fairly simple plant, that will move to start up in a reasonably good fashion.
Wonderful. I think that's actually what we have time for today, Mark. Thank you everyone for joining the Tulla Resources October Investor Webinar. And should we have missed any questions, please feel free to reach out on email via admin@tullaresources.com.au. And a copy of today's recording will be available on our website in the coming days. And we look forward to hosting you again soon.
Thank you, everyone.